You think you're losing because you're not smart enough, because you haven't cracked the code yet, because you just need one more concept, one more indicator, one more book. But here's the truth. You're not losing because you're not smart. You're losing because you're too smart for your own good. Look, every trader who blows up doesn't think they're reckless. They think they're clever. They believe they see something others don't. That's why they keep overanalyzing, overtrading, overcomplicating. But the market doesn't reward intelligence. It rewards clarity. And the smarter you try to be, the less clear you become. Because trading isn't an IQ test. It's an emotional endurance test disguised as math. The world's top traders aren't the smartest in the room. They're the ones who stopped needing to prove they were. Stay with me, because in the next few minutes, I'll show you the psychological trap of trying to outsmart the market and the 5 rewires that flipped ordinary traders into silent killers. You're about to see why your brain, your greatest asset, is also your biggest liability. Let's be honest. You've probably done this. You spend hours refining your strategy. You watch endless videos, tweak parameters, run backtests until your laptop sounds like it's about to take off. You find that one setup, the perfect entry, and when it fails, you don't accept it. You fix it, you tweak it, you make it smarter. And every time you make it smarter, you make it worse. Because you're chasing precision in a world built on probability. Most traders lose because they want to be right, not because they want to be rich. And when you're obsessed with being right, you stop listening to the only voice that matters, the market. Welcome to Discipline Trades, where we rewire your brain to trade like the top 1%, not by adding more knowledge, but by subtracting the noise that kills clarity. In this video, I'll show you the 5 psychological shifts that the best traders use to unlearn intelligence and build consistency. We'll dissect the genius trap that turns analysis into paralysis, the hedge fund experiment that proves simple beats smart, the paradox of the Dunning-Kruger curve in trading, the ego tax you pay every time you need to be right, and the one reframe that finally lets you win by being dumb on purpose. Stay until number 5, because that one shift doubled my win rate after 7 years of overthinking. Comment below before we start. Be honest, are you an overthinker or an underreactor? Now let's get into the truth nobody tells you. You're not supposed to outsmart the market. You're supposed to outlast it. Chapter 1. The Genius Trap. Here's what nobody tells you about smart traders. They usually start strong and end catastrophically. Long-term capital management, 2 Nobel Prize winners, 15 PhDs, one of the smartest hedge funds in history. Their models were flawless, their math divine. They believed markets were rational, predictable, even elegant. Until 1998, when Russia defaulted and their equations turned to ash. In 4 weeks, $4.6 billion vanished. The smartest guys in the room destroyed by the one truth their models couldn't handle. Markets aren't logical. Humans are. And humans are messy. Here's the part the documentaries skip. Their internal memo after the collapse said, "We overestimated our intelligence and underestimated randomness." That's the core of the genius trap. When you believe your intellect can bend probability, you stop managing risk. You start believing you're above randomness, and that's when randomness crushes you. We've all done it. You win 3 trades in a row and think, I've cracked it. You size up, you break your rules, and the market reminds you who's boss. Intelligence without humility is self-destruction, every single time. Chapter 2. The IQ Illusion. In 2009, researchers at the University of Cambridge tested over 1,000 traders for cognitive ability, risk control, and profitability. Guess what they found? There was 0 correlation between IQ and profits. The highest earners weren't the smartest, they were the most emotionally stable. They had average IQs but exceptional emotional regulation. Why? Because markets don't pay for clever ideas, they pay for controlled execution. Think of your brain as a Ferrari and your emotions as the driver. A Ferrari with a drunk driver ends in flames. A Toyota with a calm driver finishes every race. Smart traders can't stand boredom. They seek stimulation, they crave complexity, they think patience is laziness. So they add more screens, more indicators, more confirmation. They drown in data and call it discipline. The truth? The more complex your system, the more fragile your psychology. And fragility kills faster than ignorance ever could. Look at Renaissance Technologies, the most profitable hedge fund in history. They use complex algorithms, yes, but here's what insiders reveal. The models are built to be simple at their core. Small edge, large sample, strict discipline. Not genius, just clarity executed with machine-like consistency. So let me ask you, are you building systems to make money or to prove how smart you are? Chapter 3, the Dunning-Kruger flip. Let's talk about the confidence curve of every trader. Stage 1, ignorance. You know nothing, so you follow blindly. Stage 2, discovery. You learn a little and suddenly feel invincible. Stage 3, collapse. Reality smacks you with drawdowns. Stage 4, humility. You stop trying to be clever and start respecting risk. Stage 5, mastery. You realize simplicity is sophistication. This curve isn't just psychology, it's neuroscience. When you first learn, your brain releases dopamine because new information feels like progress. You feel smarter, even when your skill hasn't improved. That's why beginner traders with 2 months of chart study often feel more confident than veterans with 10 years. The danger zone is stage 2. You're smart enough to be dangerous, but not wise enough to know it. Every blown account is born in stage 2. Professionals live in stage 5. They sound boring because they are. Their sentences start with, if this, then that. Their profit and loss grow slowly. Their emotions are quiet. They've escaped the dopamine loop of needing to feel smart. Want to level up faster? Stop chasing new knowledge. Start practicing old knowledge. Because wisdom isn't adding more. It's deleting what doesn't matter. Chapter 4, the ego tax. Every time you try to prove you're right, the market taxes you. Not in dollars first, in clarity. Let me show you. You enter a trade. It goes against you. You refuse to cut it because you know you're right. You add more, trying to average down. You stop looking at charts objectively. Now you're defending your ego, not your capital. You've paid the ego tax. This tax compounds quietly until it wipes you out, because you can't be both a trader and a crusader. George Soros once said, "It's not about being right or wrong. It's about how much you make when you're right and how much you lose when you're wrong." Notice he didn't say anything about being smart. Here's the twist. Ego doesn't only manifest as arrogance. It also shows up as overcorrection. You lose, then you punish yourself with self-doubt. You hesitate on the next trade, miss the move, then jump in late and chase. Both arrogance and self-doubt come from the same root, ego. One says, "I can't be wrong." The other says, "I can't handle being wrong." Either way, the market wins. The pros kill their ego before it kills their account. They don't need to be right. They just need to execute. Ask yourself right now, how much of your trading is driven by proof seeking? How much by process? Because proof feels good. Process pays bills. Chapter 5, the paradox of simplicity. In 1975, Peter Brandt started trading with nothing but paper charts and a ruler. No indicators, no internet, no algorithms. After 50 years, he's still profitable. You know his secret? He only uses 3 lines per chart. That's it. He says, "The more lines I draw, the less money I make." Because simplicity is clarity, and clarity is control. Most traders can't do simple because it feels beneath them. Their ego whispers, "That's too basic for me." They crave the illusion of mastery, not mastery itself. But simplicity is the final stage of intelligence. Einstein said, "If you can't explain it simply, you don't understand it well enough." The best traders operate like monks, minimalists, methodical, detached. They trade one setup, one time frame, one risk model over and over. Boring? Absolutely. Profitable? Always. Here's your challenge. Delete every indicator on your chart for 1 week. Trade only price, volume, and structure. You'll hate it at first because your brain misses the noise. But if you survive the boredom, you'll finally see. Chapter 6, the survival equation. There's a formula I use when my brain starts trying to be clever. It's called the survival equation. Intelligence times discipline equals 0. Humility times consistency equals infinity. That's it. You can be brilliant, but if you can't survive volatility, your edge dies with your ego. You can be average, but if you never break your rules, you'll outlive the geniuses. Every trader's job is survival. You survive long enough, you eventually get lucky. You try to outsmart luck, you don't survive. The top 1% don't predict markets better. They outlast randomness longer. You want a real flex? Be the trader who survives 10 years with small, steady gains. That's rarer than any genius who doubles an account in a month. Smart fades, survival compounds. Chapter 7. The Dumb Trader Advantage. Let me introduce you to one of the most successful traders you've never heard of, Darvis Nicholas. He was a professional dancer, not a mathematician, knew nothing about finance. While touring the world, he bought stocks using telegram orders and price boxes drawn by hand. He turned $10,000 into $2 million in the 1950s without internet, algorithms, or a degree. His system was painfully simple. Buy strength, sell weakness, never predict. He admitted he wasn't smart enough to outguess the market, so he didn't try. That's what I call dumb discipline. Knowing your limitations and building systems around them. The paradox. His lack of ego became his edge. His simplicity became sophistication. Meanwhile, today's traders with PhDs and fiber optic feeds still blow up accounts. Because Darvis played a different game. He didn't need to be right. He just needed to be consistent. You don't need more data. You need fewer distractions. You don't need higher IQ. You need lower ego. The dumb trader wins because he doesn't fight his humanity. He works with it. So maybe the goal isn't to be the smartest trader. Maybe it's to be the calmest. Climax. Here's where it all comes together. You've been trying to prove something to yourself, to the world, maybe to the ghost of that person who said you'd never make it. That's why every loss hurts more than it should. Because it's not just money you're losing, it's identity. You've tied your worth to being right. And the market has been trying to free you from that prison by humbling you again and again. Every failed trade isn't punishment. It's a mirror. It's the market whispering, stop trying to outsmart me. Start trying to understand yourself. The truth is brutal but freeing. You don't need to be right. You need to stop needing to be right. Think of the calmest trader you know, not the loudest one. The one who doesn't flinch, doesn't boast, doesn't chase. That's who you want to become. Because the moment you no longer care about proving anything, the market stops fighting you. When you stop forcing trades, you start flowing with them. When you stop needing to win, you start giving probability a chance to reward you. When you stop thinking you're the smartest person in the room, you start learning again. The best traders are humble assassins, quiet, patient, deadly. Not because they're smarter, because they finally understood the real game. The market doesn't test your intellect. It tests your surrender. So breathe, stop solving, start seeing. The edge was never in your brain. It was in your ability to let go. Let's recap. You learned that intelligence can be poison if it feeds ego instead of clarity. That the genius trap destroys traders who overestimate knowledge and underestimate randomness. That simplicity isn't weakness, it's mastery. That the market rewards humility more than IQ. And that the real edge is survival, not prediction. So the next time your brain tries to prove how smart you are, remember this. Dumb traders trade the chart. Smart traders trade their ego. Masters trade neither. They just execute. If this hit you hard, like the slap you needed to hear, hit that like button. It tells the algorithm you're not here for hype, you're here to evolve. Drop a comment below with one word, surrender. That's your public signal that you're done fighting the market and ready to trade with it. Subscribe if you want more of these deep rewires. No fluff, no hype, just psychological truth. Next week's video, how to kill FOMO before it kills your account. I'll show you the mental framework Navy SEALs use to stay calm under chaos and how traders can apply it to entries. Until then, remember, the smartest trader in the room is the one who doesn't need to be. Trade simple, trade humble, trade alive.